the halftime report, guys. This is August 23rd, 2019. Powell gave his speech. Market didn't like it. China's going to add some tariffs. And we got G7 around the corner. Mark, you keeping up with all this craziness going on?
I am. So let's go. I mean, this is a big news day. Let us go through linearly what is happening from a news standpoint. So everyone understand this is a huge news day. All right. So earlier backdrop. A few weeks ago, Trump announced that he was going to issue additional tariffs against China. Okay. We saw this 3 Mondays ago. Big market down day, escalation of the trade war. All right. Trump backed off of that a little bit a couple weeks ago, 8-9 days ago, whenever it was, and said, we're going to delay those.
Yep.
We're going to delay those. We're going to push those out. Okay. So that's where we were heading into today. All right. So this morning, and let's go linearly what is happening today. So this morning, China said that it would impose new tariffs on $75 billion worth of U.S. goods and resume duties on American autos. So this was pre-market that they said this.
That's this right here.
And that was our gap down. That was our gap down. All right. So what's your time frame on your chart there, Cody?
This is a 13-minute chart on the futures.
I love 13-minute charts, by the way. Just a side note. All right. So this happens pre-market, and it said those tariffs would range from 5 to 10% and would be in 2 batches effective on September 1st and December 15th.
Meant to coincide with
exactly coincide with the dates that President Trump said on his latest tariffs on Chinese goods. So they did a tit for tat. You said these tariffs that you issued were going to take place on September 1st and December 15th. We will match you. Classic.
And you know, China's not dumb. I think they specifically chose today now to announce this, knowing that we had Powell and all the other stuff. They're not dumb. They knew that they wanted a double whammy. They wanted.
All right. So then Powell comes out.
Yep.
Then Powell comes out and hints, says classic Powell talk, kind of hedging his bets, says, hey, the economy's doing good, doing fine, but there are other factors that we're taking into account, and gave a little hint that he might cut rates. Market rallies a little bit.
See,
all right.
What I took from his actually was a middle of the road. We're not going to act at all.
Well, but it wasn't as overtly. There's nuances there.
Okay. Yeah. Okay.
And regardless what you think, regardless what I think, the market didn't take it as a negative. Price stabilizes, starts to go up. I would interpret from that price action that the market read it a little closer to how I read it, that, hey, it's not off the table. It's not off the table. So there we are heading into almost erasing the China escalation of tariffs, which was expected, which wasn't a huge shock. Trump raised tariffs. You didn't expect China to do nothing. They did a tit for tat, no escalation. You raise tariffs on these dates, we'll raise tariffs on these dates as well. All right. And then came the tweet storm. And I'm going to read verbatim because I find it very interesting what President Trump tweeted on a couple different levels. Our country has lost stupidly trillions of dollars with China over many years. Okay, standard Trump.
Yep. He's
tweet that so far they have stolen our intellectual property at a rate of hundreds of billions of dollars a year, and they want to continue. I won't let that happen. We don't need China, and frankly, would be far better off without them. Okay, once again, standard Trump tweet. The vast amount of money is made and stolen by China from the United States year after year for decades will and must stop. Once again, no big deal.
Yeah, no.
This is where it gets really saucy. Our great American companies are hereby ordered. I find that.
Yeah, I don't like that word.
That word terrifying on multiple levels. So our great American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the US. I will be responding to China tariffs this afternoon. This is a great opportunity for the United States. Unless you're Micron and have 50% and you don't have trained skilled workers in the United States that could do those things, then, well, let's not tweet about that. Also, I am ordering all carriers, including FedEx, Amazon, UPS, and the post office, to search for and refuse all deliveries of fentanyl. Once again, that word ordering. He is using the word ordered and ordering twice in response here. And listen, this is the president of the United States using the word ordered.
Mm-hmm.
That is not I mean, it's fascinating, if nothing else. To refuse all deliveries of fentanyl from China or anywhere else. Fentanyl kills 100 million Americans a year. Our economy, because of our gains the last 2.5 years, is much larger than that of China. We will keep it that way. All right. It's not over with that yet. Here's additional things that have been occurring thereafter.
Oh, wait, there's more.
There's more. All right. So that's where we were an hour and 20 minutes ago. Trump is currently meeting with his trade aides. So this was not a calculated response. This was China doing response to our tariffs, and then Trump saying, just absolutely going ballistic on Twitter.
Yep.
Absolutely going ballistic on Twitter. Now the Chinese yuan. Now, if you remember back a couple of weeks ago, which might seem like ancient history, remember that day where the market just absolutely free fell because of the Chinese yuan? Well, it's plunging right now, tumbling to a new 11.5-year low, which the White House can correctly interpret as China official intervention.
What's the ticker for the yuan?
CNH.
CNH.
So now you have China, and remember, the market lost its mind on that day where the yuan was tumbling, and then price stabilized and the market responded. But we talked about this 3 weeks ago with the yuan going down dramatically. The yuan going down dramatically. The yuan is controlled by the state. The US dollar FX currencies, yes, can the Fed do things to help manipulate it? Can Europe do things to help to manipulate it? But the yuan is directly pegged to the US dollar. Yes. It is directly, the value of it is just completely determined by the Chinese government. So devaluing the yuan, once again, we saw how the market reacted to that a few weeks ago. Absolute bloodbath on that day. Great for day traders, trading to the downside. But now that is going on. So you have, in every sense of the word, a real escalation. China matching was not an escalation. That was, and once again, you saw muted market response.
That was a calculated move.
Calculated move to our issuing of tariffs. They officially responded this morning with the dates and exactly what they were going to do. And then Trump escalates it with his tweets. Now, the specificity of that escalation, he said, I will announce this afternoon. Have a fun Friday, everybody.
Yeah. What's going to happen this afternoon? See, now his tweet storm was him just reacting to the news.
I think that is safe to say.
He immediately came out and just, hit that phone and started going.
I think it is safe to say
is him saying that's what I do like about him saying at least something this afternoon is he's going to sit down with some advisors, some foreign minister, or like some of his staff and talk through what they can do. So hopefully they can say, all right, here's what we can do. That tweet was a little bit too much. You could have taken a breath and given me a phone call first, but Before he comes out this afternoon, I'm hoping there is a nice big staff meeting where they talk through the next move and we have a calculated move, not a spur of the moment rant and rave.
I mean, and here is talk about a complex I love politics. I got my master's degree. I did my doctorate work in political science. And I love when politics and the markets coincide. But man, you have not only a trade war escalation, you have what is developing right now, full-blown currency war going on. So you have a trade war escalation, you have a currency war, you have two parties ramping it up to heights that we haven't seen yet.
Yep.
This is not pretty from a geopolitical standpoint. What does the market do when there's uncertainty? It sells off and reevaluates later. I mean, you look at the two big down days in the last 3 weeks. Trade war escalation, currency war issues.
Yep.
Sell off, reevaluate later. We're seeing our third significant downward movement day in this 3-week cycle, reminding me very much of March, April 2018, where you have this broad range, and we talked about this in the Traders Lounge this morning, where you have a broad range occurring based on different news events going back and forth, creating really havoc for a lot of different ways to approach the market. Now, hopefully, tackle trading members out there with the market at short-term resistance, which I've been hammering home this week.
Yep.
At short-term resistance. Do we do both? I mean, I sometimes emphasize things
perfectly
multiple times to get across the passion and the stance. If I only spend 25 seconds on something in the course of a week, I don't really, it's like, hey, when I say the market's at resistance, do we do bullish positions? I am trying to pound in the lessons we have learned in the past during these type of environments. All right, so now we have our big catalyst. We have two parties. So all right, there's like, okay, that's great, Mark. I didn't listen to you, or I did listen to you, or whatever. What do we do now? All right. So what do we do now? What do we know? We know that you have two parties right now escalating things on a level that we have not seen in the 21st century.
Yes.
We have not seen a trade war in the 21st century resembling this. We saw some tariffs on steel under Bush, didn't go very well. We've seen that. We were seeing an escalation in the 21st century that we've never seen on the trade war. We've also never seen a full-blown currency war. How does the U.S. respond? Because you think about this. Now, try to put your head in the mind of Trump. All right, try to do this. And once again, this has zero to do with party affiliation. This has to do with us trying to determine what is going on and what our course of action is should be for our money. Money don't care about political party. Whether you're a Republican, Democrat, or independent, your portfolio has zero concern with your party affiliation. So put yourself in the mind of the President of the United States and try to understand what the next move might be. So you issued tariffs. All right? You escalated the trade war. All right, for whatever reason you may be. But then you backed off of it a little bit.
Yeah.
All right. So I'm the President of the United States and I issued the trade war.
This drop was larger than he thought it would be.
Larger. And so in the last, week and a half or so, I back off of that. I'm like, all right. So I escalated that, but here, I'm going to send you a little olive branch. Well, I wake up this morning and I say here that olive branch. Yeah, I did escalate it, and maybe I expected a response, but maybe I didn't expect the level of response that China gave this morning.
Mm-hmm.
So my little olive branch was soundly rejected. They've escalated it. Now, as president of the United States, now whether or not you think the trade war is a good idea or not, we're leaving that out for right now because that doesn't matter. That's what we can talk about at a barbecue this weekend. We're making decisions with our money this morning. And you have an escalation on the other end on an issue that you feel passionately about. Because whatever you think about Trump, this is an issue I think you can genuinely ascertain that he is passionate about. This isn't a politically winning issue.
And he knows that if he just backed off and made nice with China, that people would like it. But this is not an issue that he just picked up as a political thing.
You don't have Americans, protesting in the street. Let's raise tariffs on China. No, this is an issue he feels passionately about, and the other side is escalating.
You can find videos of Trump talking about this back in the 80s, where he's always said that we need to fix up China. This is a vendetta that he really thinks it needs to be solved. So it's an issue he feels passionate about. And what do we know about Trump? That when he says his mind to something, he wants to win.
And what else? Once again, you can disagree with it, you can like it, you can hate it. When somebody punches Trump, what does Trump do, whether you're Hillary Clinton or Joe Biden or Kamala Harris or Jay Powell or
he punches back tenfold. He tries to swing at anything. So he's a hammer in search of a nail.
So put your mind on the man doing those tweets, the president of the United States. We know, and once again, whether you like it or not, we know that whenever you punch at Trump, he's going to punch back and he's going to get you hard. Now, so when we analyze the mind of Trump, knowing that is his personality to the core, and you're not changing that. That's how he's been his whole life. He's not ever going to change. You punch at him, he's going to punch tenfold. That when China does this escalation and the currency thing to boot, what do you think his initial reaction is going to be? All right. So we know, and we see that in the tweet that I read, those series of tweets. I go Google China's tweet response to Trump so you can read them for yourself. All right. So where does that put us now? Where does that put us now? We and I don't want to use the term violent, but the passionate tweets that were as strong as I've ever read. Yeah. A president, Twitter is a new phenomenon. I've never read a tweet so. It is the strongest language I've ever seen in a tweet, other than maybe the fire. We're gonna basically light you up, North Korea, if you do anything wrong. So the initial reaction from Trump makes a lot of sense on how we know what we know about the individual in the White House. Yes. Punches back. It makes a lot of sense that it's going to come out strong and that he's going to punch back. Now what's fascinating at this point is because the language is so strong, we have seen Trump use strong language on the trade war before. And what has he done each and every time? Eventually, he's backed off that language.
Backed off. He's come off a bit when the market starts hurting too much.
Creating a very complex decision-making process that you and I have as individual traders. We know that Trump has always backed off this language eventually. Sometimes it can be after a while. We saw that the last escalation that occurred in late April and May, and let's hone in on that price action. It wasn't Trump that backed off as the market went up. It was the Fed that came in to save the market. So Trump Now, and there were few were getting along better.
Which also makes sense why he keeps railing at the Fed now, because he doesn't want to have to back off China. He wants the Fed to pick up the slack like they did in the past.
He is, and let me read this quote. He is simultaneously fighting a rhetoric war on two fronts.
I like that. Where's that from?
Well, no, that's for me. That's me saying that.
Oh, well, I like that.
He is simultaneously fighting a rhetoric war on two fronts. And in his another tweet from this morning, he says, my only question is, who is our bigger enemy, Jay Powell or Chairman Z?
I don't, nah.
So he is fighting a rhetoric war.
Yeah.
On two fronts. And once again, let's keep politics out of it. Whatever you think about labeling the president of the Fed an enemy, that is a whole different barbecue discussion between us. Mm-hmm. But he is, we're putting on our analytical brains, trying to decide what to do next. What could possibly occur next? So he's fighting this rhetoric war on two fronts, labeling the federal chairman an enemy, labeling the president of China an enemy. Now, this creates tremendously complex market dynamics because we've seen, and we just saw it at the start of June, so this is not ancient history, that following the trade war, when the Fed pivots to a more dovish stance, pointing to lower interest rates, the market goes crazy. So May, we have a heightened trade war, sending the market down. The Fed signals, and go back.
How far back you want?
That big candle, the big candle on June, what was it?
June is here.
Yeah, that candle there. On that day, the Fed started telegraphing through synchronized speeches, leaving zero doubt that an interest rate cut was coming.
Yep, that they did.
What did the market do for the next couple months?
It rallied
Good
back
old-fashioned party.
Gained back all the losses and then some.
So, and they made zero doubt what they were doing. They had numerous speeches on that day, specific telegraphing that we're going to cut an interest rate. And the only question at that point was it going to be 1 or 2 basis points. And were further cuts going to come after that? But they sent that telegraph to the market. The market rallied, creating a nice little bullish directional environment for all parties involved.
Yep.
All right. So that's how the last escalation ended. We had downward pressure, and then the Fed capitulates and goes up. All right. So that is one version of what could occur in the coming days and coming weeks. We get downward pressure. Trump doesn't back off the rhetoric with China, keeps the rhetoric strong. Fed capitulates, telegraphs to the market that additional interest rate cuts are coming. When will this occur? Is there a certainty this will occur? What do you think about the Fed? To say that it's not a strong possibility that that's eventually how this plays out is ignoring what is hard to not argue is a weak, lacking a backbone Fed. I think most market observers would point to the Fed and say they are getting bullied a little bit on monetary policy.
Mm-hmm. They are.
And they have stated several times that the trade war, and before all of this nonsense started, and it's really important to understand what's going on. Go back to the day the Fed last met, which I believe was at the top of the range.
It was up here.
And then, no, it was, go back to that. It happened right before the big sell-off candle that occurred on, what was it, June 18th? What was that day?
I'm looking it up right now. Last Fed meeting.
No, July 31st.
There we are. July 31st.
And I believe they met on the 30th. Well, look up the date of the last Fed meeting for me, Cody. But the next day, the Fed specifically stated in that meeting that
it was July 31st. That's the exact date of the last meeting. The next meeting is September 17th and 18th.
So on July 31st, the Fed used hawkish type language for the first time in a long time and said this might be a mid-cycle adjustment and did not give any guarantees of future interest rate cuts. And specifically in their commentary and in the speeches that followed, a de-escalation of the trade war was part of their reasoning. The Fed, whether you want to argue that they are being pushed around, the other side of it is they loosen monetary policy because of the trade war as well. They become more dovish on the trade war. Now, whether they're using that as the excuse or not, heightened escalation of the trade war will give the Fed an excuse to act. Will give the Fed an excuse to act. It's a complex environment that is happening right now. We see tremendous downward pressure on an escalation level that we haven't seen before. Certainly reason to be scared. We also know that the Fed likely will act as it did at the start of June.
Yep.
Based on our analysis of the rhetoric that occurred on July 31st meeting, saying, hey, trade war is backing off. We don't have to lower interest rates anymore. I didn't say that, but that's what they implied.
We've talked about this a couple of different times, but I definitely, and Mark, I think you were one of the first ones to kind of propose this theory, and I agree with it, that he's going to continue to push at China, and he's going to fight that trade front. He's then going to use the Fed as a backdrop to lower interest rates. Then if he gets some resolution with China, we should see the market move pretty aggressively bullish at that point. If we have a dovish Fed and we get a China deal that goes through and tariffs start coming off, that could definitely stimulate the market. I think that's what he's going for. No. Trying to get the Fed to lower rates now as defense for China, as well as make it dovish, increase the monetary supply, and then get a deal with China. All good news, bullish market.
Okay. That scenario, you want to be going bullish that day if that scenario plays out. Now, there's no certainty that it plays out, which is, once again, market sells off big time on uncertainty. Because is the Fed eventually going to capitulate? Will Trump play nice? These are unknown events that we do not know this for a certainty will occur. What the market does know today is that the President of the United States ordered.
Still like the word.
Ordered. What was the exact phrase again?
Ordered
to immediately start looking for an alternative to China, including bringing your companies home and making your products in the United States. That is, and so you have an event of a cataclysmic 5 magnitude occurring over the last couple hours, with escalation language and the yuan collapsing on levels that are absolutely, it's what was Bill Murray's from Ghostbusters, go play the Bill Murray cats and dogs clips from Ghostbusters. That's what is happening to market participants today. Where does this bloodbath end? This is where it becomes extremely tricky. The most patient among us will wait for the scenario to play out.
Yes.
Say, I'm not going to try to guess. Let's say, Mark, I buy what you're saying. The Fed will eventually capitulate. Trump will play nice, especially with a Trump election year. That might not occur for 3 months. Might occur in 3 days. We don't know.
It could be a drop like this, or it could be a drop like that. We don't know.
We don't know how strong the short-term magnitude will be. We don't know what Trump is going to say this afternoon.
Yes.
The safest play is to let all this play out. Wait for the Fed to capitulate. If they do, because once again, if you're patient and they don't, hey, no harm done. Market just collapses. We don't do it. But eventually they come in at some level. I mean, I don't care. At some level they come in. Now that level might be 2750. That level might be 2650. That level might be 22,000.
You got your pal put in place.
But when that falls, we don't know. Wait for Trump to play nice with China. Once again, political actors would think he has to heading into a election year eventually. Now, China also knows that an election year is coming.
They do. And so there's a lot of, and it's hard to not talk politics when politics and the news are driving the market right now.
That's what's driving the market today.
That's exactly. So to everyone that's like, I hate it when you guys talk politics. We try to avoid it when we can.
That's the only thing that's moving the market today.
We have to talk about it. And you can see, and Mark pointed out very, very exactly, this was a move based on China. This was a move based on Fed. This was a move based on China. It's like the things that are moving the market is politics. So unfortunately, you got to follow them. So I'm going to quickly run through some of the other sectors. They're all getting hit as expected. Nothing. The NASDAQ taking it pretty hard. A lot of tech. And pay attention how the market, because I think a test of these lows established recently, the bottom of the range, unless you have parties coming out, because this puts the other monkey wrench in. What's Trump going to say this afternoon? What's going to go over the weekend? No idea.
We don't know. It could be worse dialogue, could be better dialogue. It's what the madness of the trade war is all about. But it is likely at this point, with what we know, that a test of these recent lows is going to occur. How does the market respond? He may do it after market hours. So what you guys should look at is whatever is said, and then on Sunday, watch the futures. You may not trade futures, but watch the futures so you know what's coming on Monday. So Sunday, definitely watch it. And this afternoon, we're going to get together for the Forex report and for all the reports, actually. And we're going to talk through as coaches and kind of figure out, what we want to teach our pro members as to what they should be looking for specifically. So with that, going to continue working through Russell down that low range. I mean, here's the thing, as we look at all these charts, you want to see what real fair looks like on a given day when there's no wick at the bottom. You don't see a wick, that's real fair. Yep. That means any short-term rally is just immediately squashed. Get a little baby wick. So look, and the dollar. So the dollar getting torn up by this, which when the dollar's getting beat up, you can expect that. And here's what's going on with the dollar right now. So what were we talking about? The currency, won hitting an 11.5-year low. Mm-hmm. Response from the United States will be currency devaluation in some form. Yep. Trump is a strong proponent of that. And would it be shocking? I'm going to say something outlandish right now. But would it shock anybody to see Trump use his executive order power to influence monetary policy? Never been done before, from my understanding of history. But the executive order, the executive order has been expanded. Was expanded under Bush. Was expanded under Obama. Like it has been a power of the presidency that has been expanded time and time and time again. So I just gave it my 30-second thought. I don't think he would, because I think he knows that even though
he wants to, and he can push around the Fed. If he did that himself, he'd get the political backlash. He'd be called dictatorial.
He doesn't care about that.
It would have some ramifications on a political front. It would. And then any effects or any problems that arise from the dollar and from the market, if he were to do that by executive order, are now squarely set on him. They will squarely say, well, the Fed was handling it until Trump got involved. So I don't think he will. If he does, I think it'd be a stupid move for him. So that's my 30-second thought on that. But what I also see on this is when you do see political tensions, trade talks, all these things going on, you see money move out of the dollar, one of the 3 reserve currencies. I've talked about this a lot in the Forex report. And where do you see it move into? Where you see it move into is the Japanese yen. See the big up candle on the Japanese yen.
I mean, but here's the thing on the dollar, and this is going to be fascinating because this could have happened within hours. I'm really starting to believe, whether it's through executive action or through the Monetary Stabilization Fund, whatever it may be, you are going to see direct intervention by this administration into the Forex markets as soon as a few hours from now or this weekend, where they take actions that we might not have seen in our lifetime. And guess what? Forex traders right now don't think that is an outlandish idea, because look, once again, do you see a wick on the dollar right now?
Just a little baby one.
They sense something is coming. Forex traders, which are really astute when it comes to news, they sense something might be coming. They sense something might be coming, because you're seeing the dollar ever since this started just free fall downward. Listen, this is fascinating times. Now, what are you going to do out there right now? Now, we talked in the traders lounge. Once again, being a pro member, if you're a trader or an investor, the $97 we charge for a pro monthly membership, you pick up nuggets along the way that pays for that and then some. I don't need to preach it. Our pro members will do it. We've talked about this week in our pro member products. I've talked about, hey, we're at a resistance level. Should you be going out and be doing bullish trades? And that's all I need to say. And pro members know what that means. They know that, hey, market's at resistance. We do top-down analysis. Let's wait for a breakout. Let's wait for a breakout before we get in when the broad market's at resistance.
Yep.
We talked this morning about the short-term support levels on the broad market giving out and what that means. I mean, become a pro member. Seriously. It's worth it. We're not too shabby at what we do.
If we're
not too shabby at what we do.
Out and you want to, maybe dip your toes in the pool first.
I mean, heck, I was joking that we'll eventually test those lows. I didn't mean we might test those lows of this range today.
You did, yeah. Last night during the Cash Flow Club, which, guys, if y'all didn't see that was a great show. That we could. This morning.
There are things that occur in which we take action to protect our portfolio, to protect our trades. Let's say you didn't do those today. Once again, this is one day in your very, very long trading career. You'll be trading, you'll be investing the rest of your life. Now, whether you're in control of your money or you let somebody else be in control of the money is the only question. But let's assume you're in control of your money the rest of your life and you didn't take action when that support level that formed this week, like go to intraday chart, 5-day, 30-minute chart.
30 minutes.
So we have these intraday support levels that form during any given time period. That is a lot longer than 5 days.
No, it's 5 days. 5 days, 30 minutes.
So we have support levels that form. When those support levels break, and let's just hone in on today's price action. Let's just look at good old-fashioned intraday support levels when they break. When intraday support levels break And when they coincide with longer term support levels that have been formed during the course of a few days or a few weeks, these are bearish signals. These are bearish signals. Now, classic top-down broad market analysis, when support breaks on broad markets, it's going to be really, really tough for your bullish positions to swim upstream. This weekend, think about, what are my rules about buying protection? I am not the biggest pound the table buy protection guy, but guess what? Lots of other coaches at Tackle Trading, I've heard them, as the market's being high, adding protection to your overall portfolio. That is a mantra that Tackle Trading, I've heard Matt, Tim, Noah, Gino, about buying that protection when volatility is low, when volatility is at lower levels. They pound the table.
What is the VIX doing right now?
And I know a lot of traders at Tackle Trading, a lot of pro members, they adhere to that. And on days like today, they're certainly grateful that they followed that advice.
Absolutely. Well, Mark, I will say we got to continue working through the market before
go to crude oil.
So we'll go to oil, then we'll do your metals, and then we will wrap this thing up for the day.
Crude oil hates the trade war.
Absolutely, it does.
I mean, it does. Whenever you see escalations of the trade war, crude oil gets hit hard. It hates the trade war, hates the trade war, hates the trade war. Obviously going to be following this escalation. I'm hoping that Trump's punchback tweets were a passionate response and not a calculated response. If they
were passionate, that's
well,
easy.
And we'll get more evidence later this afternoon after he meets with his advisors and comes up with a calculated response.
Yes.
To see how bloody and ugly this gets. Once again, oil, I'm really interested in this support level in acquiring boomerang style.
Oh yeah, absolutely. This morning when I saw this, and I'm adjusting my account and things, and actually I was playing Forex market, but I went ahead and put in some potential orders, puts. I need it to come down more. That if it does come down more, that they fill it a very nice. So just let it sit there. Wait, be patient. Moving on to gold. So gold, as you can expect, when we see fear in the markets, what does it do? We got a big pop up in gold. Now, Mark, are you buying gold here? Or are you waiting for it to break?
You're always at resistance. I don't care what your fundamental analysis is. There might be a couple of complex patterns, but on a big run up to resistance, 100 out of 100 times I wait for a breakout.
I absolutely agree with that one.
I mean, it's just, don't try to get tricky. You know, respect resistance. Respecting resistance in the broad markets, if you went bullish on positions, would have saved you a little bit of money today, wouldn't it have?
Patience. And silver, same thing.
Same thing. General price action on gold and silver isn't always the same. They've had a lot of similar characteristics over the last 5-6 weeks. So once again, sometimes you'll see divergence in gold and silver. It's actually not that uncommon. They seem to be trading somewhat in tandem over the last 5-6 weeks. So until we see some divergence, patterns in silver and gold are pretty identical to one another.
All righty. Well, Mark, is there any last things you think we should cover? Actually, you know what? I'm going to look at Bitcoin. The reason why Walmart announced they're looking to build their own crypto. I know. And it's like, oh, are we going to have every large company just build their own currency? So I had to laugh at that, which, yeah. It's written in the Constitution that states can't create their own currency, so that, but now we have just any company can just go out and create a currency. It's like, oh God.
My advice, my final advice, in which I would tell my mother, tell my daughter, tell my son right now, the safest play is to wait for this to play out. Wait till the Fed to signal that they're lowering interest rates, and ideally that coincides with China, the US backing off, playing nice. It's not speculation. If that occurs, we've seen how the market has reacted to that. The safest play, protection on an overall portfolio, because we don't know that that is going to happen for certainty, because we have heightened. Well, I would have already pounded into my relatives. Get that protection at the top of this range. We got a lot of uncertainty still brewing in the markets. Defensive maneuvers of covered calls. Rolling calls down and out, rolling calls out. When the market breaks those support levels, those defensive maneuvers can help lower bases and save your portfolio a little bit of pain over time. How do we respond in defensive conditions? Looking ahead, not knowing if or when it will occur, but knowing there's a strong possibility of, we know the market reaction when the Fed capitulates, sends that message, and then Trump eventually plays nice. We just don't know if it'll happen next week or next year when that occurs.
Know what you're going to do ahead of time. Be proactive, not reactive.
And day traders, once again, yet another example of day traders cleaning up on trade war environments.
Absolutely.
We've seen this multiple times in the last 3 weeks, let alone every time it's come up. Day traders absolutely clean up in these environments.
Yep. Well, guys, Mark, I let you go on. You laid it out perfectly today, and I might actually just go back and rewatch and listen to that Mark wisdom again, because it
was a huge day.
It really was.
It was a huge day in the market. You have to understand. Now you can just be a pure technician, and that's fine. And follow the charts and support breaks. Hey, if you want to ignore the news completely, I think you're going to be an excellent trader and retire rich. Never follow the news. Simply adhere to technical analysis. Make your decisions on that. You're going to do just fine. But most of us aren't like that.
We have to know why. When we see these big price movements, like, wait, what just happened? Why are we suddenly changing directions?
And just to recap, 45-second recap of what happened today. China retaliated before the market opened, matching the tariff increase and the dates with the U.S. Powell gives a little speech hinting at maybe, possibly, I don't know, an interest rate cut. Markets seem to think so a little bit. And then Trump responded with a series of tweets that were really, really strong in their language, escalating the trade war. Then the yuan hits an 11.5-year low. Needless to say, it was an exciting, from an event standpoint in the market over the last few hours. But that is the linear series that occurred today. And then it was Trump's tweet stating that I'm going to respond this afternoon. And so we don't know what that response will be. When market is uncertain, it sells off.
And so with that, after that response comes in, us coaches, we're going to tell you how you should react to whatever that news is. So we're going to, and you know where those are going to be? Those are going to be in the scouting reports this weekend. So make sure you guys are checking that out. Guys, if you like what we're doing over here, like, at least give us a like and share. Check us out over on our page, soccertrading.com. But if you just like these videos we're putting out, give us a subscribe. As Mark said yesterday, he feels a little bit younger when he hears that subscribe. So like the video, subscribe to our channel, ring that little bell so it tells you when our videos come up. We post videos daily, and so we always have the halftime report, the market recap, and then we always have teaching videos that teach concepts that we're constantly putting out every day, adding new videos, pushing 2,000 videos now. Like, we have thousands of things that can help you in your trading. Subscribe to our channel, guys. Mark, any last words before we're out?
The trade war has always provided an opportunity later down the road.
Beautiful.
I don't expect this time to be any different. It's just, when does that occur? Be patient.
With that, guys, we are out.